The US dollar ended the previous trading week with gains. Investors were pleased with the upbeat US jobs data for May, which reinforced expectations of more aggressive steps by the Fed. According to published figures, the US economy added 390,000 jobs last month. In addition, the rhetoric from the US Federal Reserve officials remained hawkish, thus confirming their intention to further raise interest rates. Watch our video review to find out how these reports affected market sentiment and the dynamics in the currency, cryptocurrency, and commodity markets. Amid signs of stability in the US labor market, the US dollar index, a measure of the greenback's value against a basket of 6 foreign currencies, added 0.5% and ended the 5-day trading session above 102 points. Thus, investors expect the central bank to raise interest rates by a half percentage point at each of its next two meetings. Against this background, the euro gave in to the dollar and fell from a 5-week high posted last Monday. As a result, the European currency lost 0.12% last week. Inflation in the euro area hit another record high and came in at 8.1%, which could force the European Central Bank to tighten monetary policy. Notably, ECB policymakers now increasingly talk about the need to hike rates, but the decision will hardly be made before September. Meanwhile, the Bank of England is already actively hiking interest rates. However, the British pound is still under pressure. Market participants are trying to analyze the prospects for higher interest rates in the face of an economic downturn or even recession. The UK is also suffering from a surge in inflation. To stimulate consumer spending, the British government has even imposed a temporary windfall tax on the profits of oil and gas companies. According to preliminary estimates, the levy on the energy firms is expected to raise £5 billion and fund aid for households battling with extremely high inflation. In the meantime, crypto traders are gradually appearing early losses. Bitcoin is drifting around the level of $30,000. Given fundamental factors, analysts are increasingly bearish on the cryptocurrency market. They believe that all tokens will collapse except the Bitcoin and Ethereum. Well, let's see whether this doomsday forecast will come true. Oil gained value last week. Brent crude added 1.3% and settled above the level of $121 per barrel. Oil producer group OPEC Plus agreed to rubber stamp another modest increase in oil output, which again raised concerns about upcoming energy shortages in the event of a decreased supplies from Russia. However, there had been speculation that Saudi Arabia was preparing to pump significantly more as a part of a reset of relations with the United States. There were even suggestions that Russia might be exempted from alliance monthly supply agreements, but that was not the case. Speaking of gold, the yellow metal lost 1.12% and closed at $1,850 per troy ounce, putting it on a track for its third straight weekly fall. This decline can be attributed to the fact that traders are awaiting an interest rate hike from the Fed. However, threats to the global economy posed by the Russia-Ukraine conflict, rising borrowing costs, ongoing supply disruptions, as well as high commodity prices, keep gold from suffering heavy losses and they act as a support for precious metal. You have watched commodity review on the currency, cryptocurrency and commodity markets on InstaForex TV channel. We wish you profitable trading and see you soon.